All right, traders, we're gonna break down the pound and the NZD position that we've been looking for the past 3 weeks. As you guys know, it worked out pretty well, so that's gonna be exciting. And then I wanna talk to you guys also a little bit about working on your trading business and not working in your trading business. It'll be very pivotal for you guys, especially during this lull of volatility, okay? Let's roll the intro. All right, guys, what's up? Welcome back to the Top Trader channel. It's your head trader here, Cleveland Bishop. Want to break down again the pound and the NZD positions that we've been taking a look at, and we're going to do a little bit of forecasting, but this is going to be the last video where we will be forecasting markets in 2019. All right, we're going to do a little bit more of a different content style of where we're talking more or less about how to work on your trading business to get ready for 2020. Okay, so we're gonna be talking about that at the end of this video. But if you guys are new to the channel, we like to break down market fundamentals. All right, we believe market fundamentals, they help you rationalize the intrinsic value of why markets are functioning. Okay, whether it's Brexit related news, stuff dealing with the trade war. There was a huge trade way back in 2017 regarding the Mexican peso and Donald Trump, and how Donald Trump was just very, very adamant on Mexican paying for the wall and how he was gonna cut all this funding, and all this crazy stuff happened. And then you had a price move in the Mexican peso of over 10%. Okay, that's a 10-cent move. You only get that kind of price move when it comes to fundamental catalysts. So the more you guys know about fundamental catalysts, the more effective you're going to be to be able to catch these longer trends. All right, and to not get washed around in the day-to-day BS of technical analysis. I love technicals. We use technicals, but we predominantly use our fundamentals and then come in and use technicals on top. All right, so if you guys want to learn a little bit more about fundamentals, you're in the right place. Make sure you guys subscribe. Don't forget to subscribe to the video, only if you like the video. All right, appreciate it. So here is what's been going on with the GBP and the NZD. First, let's run a clip last week of what I talked about when it comes to the pound. I got at a little frustrated because some folks were very, very harsh on our ideas of what could happen with the pound, but it ended up working out in our favor pretty dramatically. Here, take a look at this. You see that the pound is really starting to hit off and potentially break this high here. Okay, so that's really interesting stuff. This gives us an opportunity to potentially see a trend continuation, especially because this is happening on a weekly time frame. Okay, this isn't a 5-minute or 30-minute chart. When anytime you get a break of a high on a very, very powerful structural level like how we have here on the pound index, that can kind of help you, reassure you a little bit more that, hey, there might be some follow through here, which might give you a pretty awesome pound buying opportunity. So again, you guys definitely showed a lot of love, okay, when the market just, I mean, it stampeded in our direction. I mean, you guys gave us a lot of different types of comments related to how well that trade executed, and a lot of you guys were in that position, probably over 400, even 500 traders. I mean, we have so many people that are watching the channel, and then we also have our groups, you know, internally. So many people got in on that pound move and on the NZD move. It was definitely a great way to wrap up 2019. Okay, so here, let's take a look real quick of what happened here for the pound. Today, markets are a little bit sideways, as you can see, but take a look of that break out of structure. Literally the next day, we saw this massive candle to the upside there. And so subsequently, since then, we've slowly but surely been breaking higher. All right, so we have been holding this high, and that's just really impressive. So most people have already liquidated this position because, again, when you're coming into the new year, one little thing, since volatility is low, one little thing could spike this market in any direction, and maybe you don't want to take on that risk. So if you haven't rolled your stops into profit at this point, at least you've taken off some of your position to lock something in, and then maybe, yeah, sure, if you get another extension to the upside, maybe you can capitalize on those gains. But as of right now, you should have probably, if not bare minimum, rolled stops into profit. That's bare minimum. It'd be probably wise to take some of that position off and reap the benefits of a well executed position. So also wanted to show you guys what we're looking like here on the NZD. NZD as well. Here, let's roll the tape. Actually, I want to roll the tape real quick and help you guys rationalize what we were looking for on the NZD, and then we'll correlate it back over to where we are now. Take a look. You'll see the same thing. They're very much correlated, right? You have this overall, this is a weekly, you have this overall area here where, again, we need markets to push back up into structure. Here, I'll draw it up. Again, if we get that price move, then we're going to be excited because we know it's going to be highly correlated back over to what's happening again in the trade war. These are some trades that I'm really taking a look at. I'm going to stay with the ideas that we've had for the past 2 weeks or so. Pound potentially continuing to the upside. NZD obviously going on an absolute tirade at the moment. Okay, and this JPY as well, potentially risk off. You know, risk off. Markets may pull back there on that JPY. Okay, and again, this was just another fundamental catalyst. Again, this this one was a little different because it was more of a sentiment driven trade idea, all right, where we thought that just the slow news data coming out about the trade war was going to push this thing to the upside, because overall we are going to resolve the trade war. Overall, Brexit is going to get resolved. The media likes to add so much intensity and so much of a negative bias towards things that, of course, you're just going to think that just based off of the media, all of these markets are going to capitulate completely. But that's usually not the case. Usually things get resolved. You have the European Union extending deadline after deadline after deadline. They're doing that because they know at the end of the day, if the United Kingdom wants to leave the European Union, they're gonna leave the European Union. All right, especially if the heads of state and are basically saying, hey, this is not sanctioned by us. This is our people that want to leave. Okay, it's gonna happen. Now, what are the terms? That can be, that can be speculated all you want. But at the end of the day, they're going to leave, and we just need to stop holding, such a high standard to the media and what they believe. I'm not saying it's fake news, all right? I'm just saying at the end of the day, it's very, very negative news all the time, because that's what they're in the business to do. It makes sense. Okay, so again, here we have the NZD. NZD had stampeded to the upside in a very, very big way. Here we pull back a bit. You guys can see last week was a absolute massive week. If we look back, this is the NZD index, by the way. All right, these are currency indexes. A lot of you guys have been wanting the currency indexes. Guys, we just can't throw you the currency indexes. We've worked really hard to develop these indexes. They're not found on TradingView. You have to develop them yourself. And it takes, a little bit of formulation to get all of the currencies to work in synchronicity in the way that we have them. So again, if you're an Academy member, you guys have access to the indexes. If you're not, we're still showing you the indexes every week. So maybe you can get a good idea as to what's happening. All right. So last week was literally one of the single largest trading weeks in the past 4 or 5 months. All right. Take a look on the NZD. When you have, in terms of a green candle size, your average true range, okay, how deviated the price moves are, you haven't had a week like this to the upside for the NZD all the way back since July. And then again, you had another one in June. And then outside of that, you can just basically say, hey, this is one of the top 10 weeks for the NZD for the entire 2019. And we were in on that move, and that's fantastic. Okay, so again, whether you played that with the NZD JPY, which was the actual trade that we said, hey, if you're going to play it, NZD JPY is probably the pair to play. And not a lot of times we like to put out the actual trade idea, but we put that one out there and it worked very, very well. Again, back to the upside. If I show you guys what it looks like on the 4 hour, it looks huge, but again, it's also a very, very large price move on the daily as well. We were looking for a break of this simple consolidation at 69. We're all the way in the 71 mids. And so that's right around a 160 pip price move. So not so bad there. Okay, so that's what we're looking like on the forecast. And when it comes to where we think markets can go here in the future, I do think that we will see a continuation on the NZD. Now for the pound, again, there's so little volatility right now, and the pound, there's just so much crap that's kind of coming in and out. I'm not so certain as to where the pound could go, and I don't want to make any kind of like ideas or predictions. I'm not trying to predict where markets are going to go. I just want to get an overall idea and have an overall bias, more or less. And my bias on the pound right now is in a buy. It's a sell. I don't want to have a bias. I choose not to have one. I care not to predict what's going to happen to pound. That's the great thing about trading. You don't have to have an idea as to where the market's going to go. Now, here on the NZD, on the other hand, I would like to see the NZD continue to trade to the upside, just based off of, again, what's happening in global markets. Same thing with the JPY. If I show you guys what we're looking like on the JPY index, you guys will see, as we thought we would, we are still breaking the lows here. And we tested the lows, not today, but maybe about 3 or 4 days ago here, you can see we broke the low completely, and we really stampeded outside of this consolidation where markets were being held for quite some time. All right, so that's what we're looking like. Let's see what happens in that scenario. Again, I wanted to talk to you guys really about working on your trading business versus working in your trading business. Guys, when you're analyzing charts, when you're reading articles all day, you're working in the trading business, okay? Basically, you have committed to a process. You are saying, okay, I know what I'm doing. I know the step-by-step approach I want to have in regards to finding good trading opportunities. Opportunities come and go. And so what you're doing is you're saying, hey, look, I need to be analyzing markets now, because the process that I have created, the strategic process, the methodology that I have as to how I find these trading opportunities, I'm going to keep executing on that. And so again, if that's a little hard to understand, imagine it to be this. Let's say you own a company where you sell t-shirts. Simple as that. Okay. Working in your t-shirt business would be say it's a startup and you're just now getting things going, and you have a few sales, maybe about 10 or 50 orders a week. 10 orders a week, 50 orders a month, whatever you want to do. Okay. Well, in that case, you are in the business of what? Probably you have to put the print on the shirts yourself. Okay, you have to find a manufacturer. I mean, the process there is pretty simple, but it's very mechanical, more or less, right? So if you want to optimize that process, you're going to have to stop printing shirts at some point. You're going to have to take a step back and figure out how you can make that process a little bit more scalable. What happens if you get 500 orders, right? What if you get some crazy, awesome influencer Instagram post and somebody says, Cleveland, dude, I love this shirt so much, I'm gonna wear it, and then boom, now you have all these orders. Your current process is gonna be extremely, extremely insufficient. So then you have to pull back and say, okay, can I make this a little bit more automated? Can I hire somebody to delegate things for me? You have to work on the infrastructure of the business, and then so on and so forth, right? Fashion Nova wouldn't be able to push out hundreds of thousands of units if they were still the primordial formation as they were way back in 2010, where the guy was probably just in the shop himself cranking out on a few shirts at a time. His business had to change. So at some point you have to take a step back, stop manufacturing, and just do what you got to do to make sure the process gets a little bit smoother and allows you to make more and better decisions. Same thing in trading, okay? If you're just constantly hitting, constantly analyzing markets all the time, you're always trying to mark up charts all the time. At the end of the day, that's like, you don't know how efficient you are at doing that. And if you see that you are not efficient, AKA you're not profitable in doing this process, then you probably should take a step back after a large enough sample size. Okay, I have to mention that, because if you place 5 or 6 trades and they weren't profitable and you start going back and working on your structure, you're doing it the wrong way. It's the sum of large numbers. You need probably 50 to 100 data points before you go back and start working on your actual infrastructure. Okay, that's going to be extremely important. So there's a push and pull effect. I personally think that it takes maybe 50 to 75 trades, maybe even 100 positions before you can start really understanding what it is you're doing. And then you can say, okay, hey, look, I executed, this was my result. Let me pull back a bit and see how I can make this process a little bit more easier. And I think this is a perfect time to do that because at the end of the year, volatility is low. I think we caught the 2 best positions and the 2 best moving currencies that we're gonna catch for the next few weeks or so. So it sounds like a good idea to me for you guys to maybe take a step back, work on the business a little bit more, look at the methodology, look at the money management regime, look at the edge that you claim you have as to how you're pulling money out of markets, and really question it. Really question what you can do to improve in that scenario, so then that way you can go back into the market way more effective. Okay, and a little bit less stressed out. Okay, we get a hit up a lot about you guys potentially being a little bit overwhelmed because you're staring at charts all day. It might mean that you're a little insufficient or very uncoordinated as to how you are executing right now. Take a step back, be more effective. There's no real reason. If you have your methodology down to a T, you can probably look at charts for 15 to 20 minutes at a time, maybe 3 or 4 times a day, and that should be all the information you need. Don't let the news media and the constant information that's coming out, make you feel like you have to constantly be analyzing charts, and don't be looking at 5-minute, 10-minute, and 30-minute charts all the time because you're constantly getting all this feedback. You're putting yourself in a world that you don't have to exist in. Things can be much more casual and much more methodical if you position your business the right way. So we're going to talk a little bit more about that in regards to trading. Let me know what you guys think on that. Comment down below. I want to hear your comments as to, maybe what process you feel like you could work on and enhance. And then we'll just be right there to comment away and reply back to you and see where we can help out. Okay, so again, app dropping soon. I hate dropping the app at the end of the video because I don't even know how many of you guys are still here. But if you guys have not joined the waiting room for the launch, it is in the bio. Again, this is going to be really important because if you guys want early access to the app, we may not be coming out till March, but if you're in the waiting room, you will get the app in January. Okay, so you don't have to wait 60, 90 days to have access to the application. We really believe that it's going to be one of the pivotal things that you use in your trading every single day. I don't think you'll be able to trade without the app. That's how good it is. All right, so take a look at it. There's a description as to how it works and what it will look like in the waiting room. You guys can take a look there. And outside of that, guys, if you have any questions, let us know. The Academy, again, it's still open. It's going to be a great time because we're not going to be trading as much, so we can probably spend a little bit more time with you guys. So if you want to work with us a little bit at a closer clip, you guys can head in the link. There's 2 links, one to the app, one to the Academy. That will be in the bio there. All right, so that's it, guys. Relax for markets. Let's work on the strategy a little bit better and work on the methodology a little bit better, and I'm sure we'll have a fantastic 2020. We'll be putting out more content related to this. And again, guys, have any questions, let us know. Talk to you guys soon.